Welcome back everybody to Cryptocurrency Weekly, where I keep you up to date on what's happening in the cryptocurrency space. From technology updates to the latest news, we have you covered. So if that's something that interests you, please subscribe to the channel and give the video a thumbs up, and please comment your thoughts below. This channel is for information purposes only and is not investment advice, nor is it buy or sell signals. This is my opinion and that is all. So with that out of the way, let's get right into it. So today, first up, we're just going to go over the Ethereum upgrade, which is going to reduce ETH supply. So that's moving into its final stages. The London hard fork will include EIP 1559, which lowers the amount of ETH miners receive. So the London hard fork should be ready in July. It will hit the Ropstein testnet next week. The London hard fork scheduled upgrade to Ethereum is first making its way to the blockchain's test networks. Tim Biko of the Ethereum Foundation announced today that London will go live on the Ropstein testnet around June 24, so this is only a few days away now, followed by Gorelli on June 30 and Rinkeby on July 7th. All dates are estimated, so we've known Ethereum in the past to not meet their deadlines, so I wouldn't be surprised to see this push back. Anything can happen, so don't get too excited. Is this going to be a sell the news event though? Do you buy the rumor, sell the news? Do you think once this update goes live we're going to see a sell-off? It's always possible, but I'm a long-term believer in Ethereum, and I'm not going to be selling any of my stack for quite some time. So once the upgrade has successfully been activated on these networks, a block will be set for the Ethereum mainnet. The London upgrade will implement 5 separate Ethereum improvement proposals, EIPs, which are changes to the blockchain code that must broadly agreed upon by community members before they can be adopted. So the most controversial change is EIP 1559, originally floated by Ethereum creator Vitalik Buterin, which alters how network fees work and how miners, the people running the software that process all the transactions and mints new ETH, get compensated. So currently, every time someone makes a transaction or interacts with a smart contract on Ethereum, they must decide on a fee, which is more or less a guessing game. So to push through a transaction quickly, you can get set a high fee, but ensuring miners will include it in a block. If you lowball intentionally or not, if you try to get a lower transaction, it will likely wait until miners are less busy processing high-paying transactions. Speed is important in several instances, including when trading upon Ethereum-based decentralized exchanges such as Uniswap, where token prices can swing rapidly. Traders lose money if they wait. So to tackle this issue, EIP 1559 will double the capacity of blocks. This implies that most of the time, blocks will have an extra 100% of their capacity that they can fill with transactions. So as long as transactions is sent with a fee higher than the base fee and including a tip for the miner, it will be included in the next handful of blocks. If the network is super congested, the fee structure will use the current auction system. The added transparency is billed as an improvement to user experience. Some miners, however, claim that it's deleterious to their experience. Under EIP 1559, that base fee is burnt, meaning taken out of circulation. So instead of going to miners, the idea is to turn ETH, which doesn't have a supply limit like Bitcoin, into a deflationary asset, or at least create some deflationary pressure. So unlike Bitcoin, Bitcoin isn't inflationary, with this new update, Ethereum will have deflationary pressure, meaning their supply will actually reduce. Okay, will this create a bit of number go up? Who knows? I think it will push Ethereum's price up over the long term, but we'll see how that plays out. Less ETH in circulation should theoretically be good for miners because it can increase demand and the exchange price for Ethereum, which miners will still get as a reward every time they create a new block. Sparkpool, the biggest mining pool on Ethereum, isn't persuaded and has come out against the change. In February, it wrote EIP 159 burning TX fees, wealth redistribution for miner to hodler. That's why so many people support it, but it is a tyranny of the majority in the name of the better UX. In fact not, it is robbery. So as long as London is the only on testnets, it's just an experimental robbery, but that upgrade is nearly here. Alright. So to put things in perspective, since the second half of February, the average cost of facilitating transactions on the Ethereum ecosystem has continued to hover around like $16 and $20. So it makes it impractical for individuals looking to, facilitate smaller transactions to make use of the platform. So for people that don't have a lot of money, it isn't really that beneficial for them. So a lot of us, $16, $20 might not seem like a lot for a transaction, but for a lot of people, that is a lot of money. So we're hoping with all of these upgrades, well, I'm hoping myself personally for the long-term outlook of Ethereum, when the the update is fully laid out, that this is going to be a issue of the past. Okay, so I view it as a short-term problem, but which has solutions already in place. The London hard fork, it promises big things, so it's still quite pertinent to delve into the question of whether EIP will be the long-term solution that ETH needs to resolve its scalability problems. But yeah, we'll see how things go. It's a fairly new technology. We all know cryptocurrency is extremely risky. This isn't a buy or sell signal. It's a risk that you either do want to take or that you don't want to take. All right. Next up, DeFi-focused Grayscale exploring 13 more crypto assets for its trusts. Grayscale has added 13 new cryptocurrencies to its list of assets under consideration, again exhibiting significant interest in DeFi. So institutional asset manager Grayscale has announced 13 more crypto assets that they're considering, which we can see here. Okay, so they've actually posted it on their Twitter page, and I've got a picture up here to enlarge it for you. So we can have a look at the assets that are currently under management here on the left, and we can also have a look at what they're considering here on the right. All right, which is obviously their first purchase was Bitcoin. They've been in the space for a minimum of 6 months now that we know about. It's probably going on more like a year now. So obviously, as they're going deeper down the rabbit hole, they're discovering all of these new assets with potential use cases such as Chainlink with their oracles, and obviously Ethereum, as well as Litecoin, which is for digital file storage. So very interesting stuff. So these guys are going to be in the ecosystem for quite a while, whether you like that or you don't. That's just the way it is. So Tim Draper has doubled down on his prediction that Bitcoin will reach 250,000 by the end of 2022. Draper first made this prediction in 2018 when Bitcoin's price was still trading below $10,000. So being a venture capitalist and a tech investor, Draper has always had faith in the coin, always taking any opportunity he could to show his support for the coin. The venture capitalist believes that Bitcoin will become an accepted mode of payment everywhere, which he believes is what will drive the coin price up to the point he predicted. He says, "I'm going to be right on this one." Tim Draper has always had strong convictions when it comes to Bitcoin. His support for the coin has never wavered. He believes that Bitcoin will be at the center of all of the world's financial activities for the next 20 years. He continues on to state that he believes that the price of the coin will keep going up, his reasoning for this being that because there are only 21 million of them. This is in reference to Bitcoin's limited supply, so Tim Draper is obviously a huge Bitcoin bull. Now, where do we sit today? What can we expect over the next few months for Bitcoin? Well, we just printed a bearish signal, a death cross. So that's when the 50-day moving average and the 200-day moving averages cross. It's called a death cross, okay? Now, as you can see, we've had many death crosses in the past, okay? The most recent one was here of March 22, okay? So when we had this death cross, it actually resulted in a parabolic bull run. Now, does that mean we're going to go up? Who knows? But we've had death crosses in the past, like this here at the end of the 2017 bull run. And even though we did get a temporary relief rally, we trended down for another year and a half. Now, do I think Bitcoin is going to trend down for another year and a half? No, I don't. This chart here doesn't indicate a blow off top to me. And we consolidated for a few months. And we've just come down and we consolidated a bit again. Well, it seems a bit silly to others to call that a consolidation when you're down 55%. But as we all know, Bitcoin is a highly volatile asset class. So when I look at the macro outlook, this is why I don't believe we're going to have a repeat of 2017 with all the stimulus measures that have been going on and continue to go on within the economy. So just because we're printed a death cross doesn't mean that we're going to be going into an extended bear market, because as you can see in 2020, that resulted in a huge bull run, okay? So that's where we are at the moment. I'm not buying, I'm not selling at the moment. Well, because I don't have any more money to buy, all right? So I'm thinking in a couple of weeks' time, I might add to my position, but I'm pretty content just sitting this out and seeing how it goes. I have dollar cost averaged, as you guys know, all the way from here, all the way down to current prices. So I have purchased some Bitcoin at around these prices, so I'm not too in a rush to get a hold of any more at this stage. I'm just happy to sort of sit it out and wait, okay? But there's been, as you can see, there was a death cross here in 2015 that made a bull run as well, okay? So I think that Tim Draper will be right, that Bitcoin will reach about 250,000 by the end of 2022.
but time will tell. But obviously, big news, Tim Draper is a huge investor in Bitcoin, and he's been in it for years now. You know, he's no stranger to this game. So very, very interesting indeed. Let me know in the comment section below, what do you think? Where do you think Bitcoin's going to be going over the next few months and over the next year? So let me know what you think is going to happen with this death cross that has just come into play, where you think we're going to go. If you enjoyed the episode today, feel free to subscribe to the channel, give the video a thumbs up, and give me your thoughts in the comment section. I really appreciate having every one of you here. I like keeping you guys up to date with what's happening in the cryptocurrency world, and I will see you next time. Take care, everybody. Ciao.